What's going on, everybody? Julian here, J. Lewis Trading. Just doing a recap for you on Sunday. Want to get you guys excited and motivated for the following week, starting tomorrow. I want to start off with a review on NEGG. This is, as you can see, a pretty big play. I was talking about this on the 30th of June, and you can actually see right through here, price action started to ramp up on the 30th, and over the course of a few days, this thing blasted up over 450%. So with all the meme stocks that are going on out there, you know, AMC, GameStop, and BlackBerry, Sundial, some of these, Nokia was one not too long ago. There are other wildly volatile plays out there that you can take advantage of, and NEGG was one of them. I'm going to talk about PBI. That was my last trade to end the week. But what I want to draw your attention to is just simply the approach. The approach for me and my team, our community, it's always the same. We're just looking for volatility. And you can see right through here, volatility really starts to step up, right? And so when we start to see that step up in volatility, whether it's here or breaking this level right through here, we like to get into these trades because we never know when that volatility is going to spike. And you can see right through here that there is that massive spike in NEGG. Now, the beautiful thing about this is that this is an optionable stock. And so although price action is up over 450%, I'm more concerned about the options because options can be very, very volatile. And when you can get into an options play before the IV explodes, you can really take advantage of some massive moves. So I'm not going to get into what the options did on the back end of this on NEGG, but just keep in mind that right through here, when price action was starting to get busy and price action was ramping up, the implied volatility was still relatively low, and the options were priced at fair market value, maybe even on the cheap side. And as soon as that volatility busted right through here at 2350, the IV, the implied volatility, exploded, and the options became more expensive if you were just entering the market as a new call buyer. And if you're already in the position with calls, they're going to explode. PBI, primary intraday example of what I was doing last week. This was a pretty decent play as well. I had no qualms about taking this play, and you can see right through here we had a gap up and a flag off of the VWAP. Now I just want to put something into perspective. This little area right through here where I flagged long, I had a 100% realized gain on the options intraday, okay? So what I was doing was I was getting long here, I was watching price action move, pulled back a little bit, moved a little bit higher, and then I was tracking trend line support. Not a big fan of trend line support, but it did crack right through here, and as soon as this level cracked, I was out, and I realized a 100% return on my options intraday. And those weren't weeklies, by the way. Those were, I had a week of value on those. So point is, volatility on top of volatility is a beautiful thing. If you can pinpoint something before it starts to ramp up and before it starts to get busy and your options trading it, you can get into a situation where you're buying undervalued calls, and then when the volatility hits the tape and the implied volatility on the options explodes, the value explodes. And so this is one thing that I'm going to be talking about more and more often. If you have any questions, julian@jlewistrading.com. I really think that you should watch this video again if you want and listen to some of the things that I'm saying. And also keep in mind that we're going to be hosting another webinar where I'm going to be teaching this stuff again. If you have any questions, julian@jlewistrading.com.